Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. In the second report this week we will take a look at the Canadian dollar because market has completed our targets that we have specified in the end of the May, where we have suggested that market probably will continue to move higher because the price action that it was shown by the Canadian dollar 2 months ago was not quite rational, or better to say it was rational for bearish patterns that were in place at this moment. So if you remember, those of you who are monitoring and reading our reports probably should remember that in the Canadian dollar and was the guidance steeple to sell had been formed, and after the minor reaction on intraday charts we saw the price action that stands a bit contradictory to normal bearish behavior, and that's why we said that probably market will continue to move higher. In particular, speaking on the weekly chart, that guys, weekly chart here was the bullish grabbers have been formed that were suggesting taking out of this top. It's also the butterfly starts to form here, and we said, well, we should wait for first of all taking out of the 131, but there's a potential it should be 133 because this is the 1618 127 butterfly pattern. So recently this target has been hit, but the manner how it has been done, it's really very interesting, and that's why today we have decided to dedicate the second video and the second weekly report to Canadian dollar. If you'll take a look at the weekly chart, guys, you will see that market here has formed two clear bearish setups, clear bearish patterns. First of all, take a look at recent week action. After reaching the target of this butterfly that we have here, market has formed a reversal week, because on the last week market has opened, create a new top. So if you will take a careful look, you will see that was the minor wash and rinse of this previous top here, and price has closed below the lows of the previous week. This price action calls as the reversal week in the classical technical analysis, and usually it becomes very strong pattern that lets us to suggest that at least 1-2 weeks more this downward action will continue. This is the first moment. Second moment, although the minor wash and rinse has been formed here, but this reminds the tweezer tops. This also indicates the possible reversal. But the major pattern, of course, has wider picture. So you can see actually market has formed nicely looking 3-drive sell. So we have the first drive, second drive stands at 127 of the first, third drive stands on the crossing of the 1618, this blue line of the first, and 127 of the second, this red line. It's very good ratio for the 3-drive pattern. Besides, the final part of this 3-drive takes the shape of the butterfly, so you could easily recognize it. So that is, as you can see, left wing, that is right wing, so butterfly. Classical target of the 3-drive is the bottom between the second and third drive, and stands right here 25.26. If you'll take a look at the fundamental background right now, guys, in general it's not contradicts to this possible strength on the Canadian dollar in the nearest time, at least within a few weeks, because we know that the crude oil price is rising, and it currently has the chance to reach the $82 per barrel. This is the upper border of the monthly confidence resistance. So take a look at the monthly chart of the crude oil. You'll see that's our major ABCD pattern. Downside reaction has not followed. There's completion of this ABCD, and it probably will follow in the nearest time. But currently, market has still some room to reach the 82 target. So $2-3 per barrel still could be reached here. Second, the recent fundamental data in Canada shows the improving situation in the economy and an increased chance that the Bank of Canada could raise the rate. And that also brings some support to Canadian dollar. It means that there's some reaction on the weekly chart within the few weeks could fall and market could show this downward action. So currently, overall situation Canadian dollar looks bearish. I mean the chart, not the Canadian dollar itself. In the Canadian dollar it looks bullish. On the chart it looks bearish and suggested that further downward continuation here. But at the same time, if we'll take a look at the daily chart, market right now is a bit overextended down. So you can see this recent drop within the recent 2 sessions has put market right to the oversold near a fib support. This combination creates the Judd Napoli bullish stretch pattern. As market is a bit overextended, and the combination of the oversold and the fib level creates the bullish pattern, the bullish directional pattern. Also take a look at the market will open on Monday right at monthly pivot point. This provides us some support. It means that the current point is not really very good for taking the short position immediately, and it would be better to wait for some bounce, for some pullback on the intraday chart for taking the short position with the attempt of downward continuation. Next target probably will be somewhere around 130, 130.50, or this will be confidence support on the daily chart. Also, guys, since market will open near oversold, somewhere here will be the floor for a common week. Because as you know, the financial markets do not like to deal with oversold too long or with overbought. So take a look how it usually happens. Market trying to pass for the oversold once, pull back, second, again pull back. Now touching the oversold, again pull back. So as you can see for this week where they stand, that was approximately the floor. So although market has challenged 3 times this area, here is the same. So market touched, reached the oversold, showing minor pullback again here and here. So it means that somewhere around the oversold level will be the floor for a common week, and it means the chance on upward bounce will be significant. At the same time, currently, guys, on the hourly chart, I do not see yet any clear bullish patterns have been formed. So for scalp traders, those of you who plans to trade Canadian dollar on the long side, it's not time yet to act, because you need to get some clear bullish reversal patterns that could be formed here. One thing that I see, guys, is just reaching of this A, B, C top, kind of the double top target. So you can see double extension here has happened, so it's usually equals between the tops and the neckline of the double top counted in the direction of the breakout. This is 2 sides of the A-B leg counted from the neckline, from the P point down. This is classical approach to estimation of the double top target, and it has been reached. Here you can see some minor reaction, but it's not clear what the reason for this reaction, either the reaching of the target or it's just because market has reached the oversold. So that's why currently, guys, we need to wait a bit more for those who plan to take the long position and see what patterns particularly will be formed, because market here could make an attempt to move slightly lower or to form the pattern. For others, for daily traders, this is of course the time of the waiting of the pullback. Pullback probably will be significant, because if we'll take a look at the weekly chart, market was standing in the upward direction for a considerable period of time. This was months. So 1, 2, 3, 4, 5, 6, 7, 8, and more than 2 months market stands in upward direction. That's why the first reversal usually leads to the ABCD retracement on a daily chart or on the 4-hour time frame chart. And most common pattern that could be formed here is, of course, guarded triple to sell. So that could become the drop, and here market could form some kind of the large ABCD pattern on the hourly chart. I will not be surprised if the retracement will be significant, so market could retest the B point lows approximately 132.50, or even to reach the 618 resistance. Weekly pivot resistance one is 132.80, 133. So that will be the approximate area where we need to watch for potential short entry. So let's keep watching what will happen, because the pattern itself on the weekly Canadian dollars looks very attractive, and definitely it's worth of our attention.